So we'll go to accounting, paper 1 of 2, 2020, October, November. Question 1. A trader prepares financial statement each year. What do these assist the trader to do? To make decisions about the future. That's clear. Question 1 is D. Question 2. What is not an example of a bookkeeping entry? Entry made in the back column of the cash book is a bookkeeping. Cost of goods purchased on credit entered in the supplier's accounts of bookkeeping. Expenses paid during the year entered in the income statement. As soon as an income statement is prepared, that is a systematic accounting record. That is accounting. It's no more bookkeeping. So it is not there. And D, goods returned by a customer entered in the sales returns. We are still preparing our bookkeeping. So A, B, and D are still bookkeeping, except C, which is a systematic recording. That is financial accounting. Clear? So the answer is C. Question 3. The following balances appeared in Hussein's books. Did you get that right?
Yeah.
Okay. So they said we should calculate the total liabilities. So liabilities are the trade payables, which is 4,500, other payables, which is 300, and overdraft, which is a short-term loan or current liability, which is 1,400. So the total is 6,200. B. Question 4. What does the owner's equity consist of? That's the capital invested. That's the capital, the amount of money the owner of the business plays into the business. That's capital. So it's B. Question 5. Which entries did Sally make to record the following transaction? Rashid, a credit customer, returned damaged goods. As soon as damaged goods is returned, you have to debit sales returns and you credit the customer's account. Yes. Rashid. Question 6. The following account appeared in the book of Mary. So which statement is correct? In as much as Mary is preparing the book, so that means a debit entry in the books of Mary's account, a debit entry in the books of Paul's account in Mary's, entered by Mary, means that Paul is owing Mary. You get it? So the answer is A. Question 6A. Question 7. In which section of Zamir's ledger would the following account be maintained? Sales account. Sales account is a nominal ledger, and the account of Arjit, which is a trade receivable, is a sales ledger. I think that's clear. Question 7A. Question 8. Sue allows 2% cash discount on credit customers who settles their accounts within 28 days. Jane purchased goods, list price of $200 on 10th of September. She returned these goods on 15th of September. Which entry would Sue make on 15th of September? Not the goods bought were returned, all were returned. So no entry was made. It is only into the sales returns journal that you record the total value, which is 200. So the answer is B. Yeah. Clear, right?
Yeah.
D. Yeah. Question 9. Yeah.
Yeah, I know.
Okay. Question 9. A transaction was posted to the wrong account of the same class. That is error of commission. That means we have the same class of account, but it's wrong posted. So we call it error of commission.
I thought it was like same amount, like did it twice or something like that.
No, that is error. No, maybe double reversal. Double reversal of entry. That means you double twice, right?
Yeah.
You're supposed to debit once, credit one.
Yeah, you did.
You debited twice.
That's original entry.
Error of original entry.
Yeah, that's.
No, this one is error of commission. So question 10. Motor vehicle expenses $50 were incorrectly debited to the motor vehicle account. Which journal entry corrects this error? First, you have to debit motor expenses account and you credit motor vehicle account. That finishes it.
What? Motor vehicle expenses?
Yeah, you have to debit because you credited it. It was incorrectly, they said motor expenses were incorrectly debited to the motor vehicle account. So you credited motor vehicle, you debited motor vehicle account. You have to credit motor vehicle account, yes, and now debit motor expenses account.
Oh, yeah.
Is it clear?
Yeah.
So debit motor expenses account, credit motor vehicle account.
Yes,
Question 11. Kate calculated her draft profit for the year at 28,400. She later discovered the following errors. Rent prepaid by Kate was understated, 1,000. Closing inventory was understated by 1,500. Both will reduce the profits. So what do? You add them to your profits because they were both understated. Rent was understated.
The rent was understated.
Yes. When your rent is understated, yes, your net profit will be overstated.
Yeah.
And you get my point? So rent is prepaid. If it was prepaid, that means you paid advance. So that is rent prepaid, not expenses anymore.
Yeah.
It's expenses, but for the next year, it's going to be in your statement of financial position. Do you understand what I'm saying here? So your statement of financial position, you're going to have rent, other receivables, and your other receivable was overstated or understated by 1,000. So that would understate your profit. Do you understand? So you have to add it to your profit. And closing inventory was also understated for 1,005. You have to add it to your profit. So it will be 2,800 plus 1,000 plus 1,005, 30,900. Did you get it right?
That is the opposite.
No, it's wrong. Do you get it now?
Yeah, I got you.
Question 11, done. Question 12. A trader bank's statement showed a credit balance 2,940. The following items had not been entered in the cash book. So that means there's a bank reconciliation statement that brought about the bank interest received and credit transfer. There's a bank reconciliation statement. That's what it means.
Yeah.
So what do? The value in the credit balance, you have to deduct it from what is being seen in your bank reconciliation statement. Do you get what I'm saying here?
Yes.
Your bank statement is recorded 2009 for your bank account. The bank statement is besides the bank statement showed the credit balance of 2,940. So your debit balance in your cash book should have the same figure, but it's not having it.
Okay.
So why? Because there's an interest charge. There's an interest you receive that the bank has credited, but you have not debited in your account. And there is a credit transfer that was done to you that has not been recorded by you, but it has been recorded by your bank. So that means the supplier has paid you 280 and the bank has paid you 70 that has not been recorded by you. So these two accounts are supposed to be in the debit side of your cash book, but it's not there. So you have to take it away from your bank statement. So that's the figure. So the original figure you have in your cash book is 2,590. Do you get what I'm saying there?
Yes, yes, yes.
Your cash book has 2,590 balance instead of 2,940. How do we get to know? Based on the figures from the bank, which is 70 and 280, which is 350. Is it clear now?
Yes.
That's question 12A. Question 13. What is the purpose of preparing a sales ledger control account? Yeah, to make fraud difficult, to avoid fraud. B. Clear. What did you choose?
D.
To show the total cash and credit sales. No. Control account. Question 14. Judge is preparing his purchase ledger control account. Which information would he obtain from his general journal? Contra. Because contra will be in both the sales account and the purchases account. Contra will be in the debit side of your control account and the credit side of your purchases account. Contra entry. That is going to be here and there.
Oh, yeah.
Do you understand what I'm saying?
Yes, yes, yes.
Question 15. A trader debited the cost of repairing office equipment to the office equipment account. How did the error affect the financial statement? Cost of repairing is an expenditure. This will overstate the profit. At the same time, overstate the non-current assets.
Yeah, right?
Yeah.
Yes.
So it's A. You clear?
Yeah.
Question 16. Did you get question 16 right?
Yeah.
Okay,
yes.
great. They said Rashid provided the following information. We have depreciation charge, which is 52,000 multiplied by 20 divided by 100. That's 10,400.
Yeah.
The depreciation charge plus provision for depreciation gives us 33,400. Now, the net book value, how did you get it?
I first of all I did the 20% of 52,000.
Okay.
And then minus that from the 50,000, and then minus the 23, and then add the 2,000 the MVP.
Yeah, you know your 2,000 BV. Normally, when you check, because it's been recorded twice, instead of machinery account, is recorded in instead of recorded in expense account, is recorded in machine equipment account. So that means you have to double if you are supposed to prepare a control account.
Yeah.
You have to twice double the debit entry. You have to debit entry twice for what machinery accounts and machinery expenses accounts and suspense accounts. Both ways is correct anyway.
Account
will be credited. The machinery account will be debited.
But we debit twice.
Is it clear?
Yes, yes.
That's question 16. That's
16 is
B.
Yeah.
Question 17. They said a machine which cost 32,000 was sold for 14,000. Did you get it?
No, I didn't get.
All right. They said a machine which cost 32,000 was sold for 14,000. The total depreciation at the date of disposal was 15,000. So the cost is 32,000
Okay.
minus the amount disposal value was 14,000.
Okay.
So the amount it was sold is 14,000. So the disposal on charge is 18,000. Depreciation is 18,000.
Okay.
So how much was it disposed? It was disposed for 15,000. So total depreciation charge equals to 15,000. Value of asset is 18,000. Then it was sold for 15,000. So disposal value minus the value of the asset gives you the value of
3,000.
Yeah, which is negative 3,000. The asset, the value of the asset after depreciation was charged is 18,000, but it was sold for 15,000. You lost 3,000.
After depreciation, it's 18.
Yeah, that's the value. The net book value is 18,000.
Oh, yeah.
But it was sold for 15,000. So you lost 3,000. You're supposed to sell it 18,000 or above 18,000. Clear? Do you get it or not?
You have to. No.
The asset was disposed for 15,000.
Okay.
But the value of the asset is 18,000 after depreciation.
Yeah, 3,000. Yeah.
Negative.
Negative because it's supposed to be sold by 18,000, but it's sold by 15.
Do you get it?
So, yeah.
Because the historic cost of that asset is 32.
Yeah.
It was sold for 14. They said was sold for 14. The total depreciation at the date of disposal was 15,000. So 32,000 minus 14,000 gives you 18,000. Then what was the value of the disposal? 15,000. So we lost 3,000. Do you get it now?
Yeah.
Okay. Question 18. Bernard maintains a provision for doubtful debts for 3% of trade receivable at the end of each year. It got this. So 42,000. Did you get it right?
No.
Yeah. So 42,800 multiplied by 3%, which is 1,284. That is for September 2019. For September 2019, the provision for depreciation is 1,284. That's 3% of trade receivable.
Yeah,
that's 1,284. Now for August 2020 to be 1,284 minus the amount provided for depreciation in 2019, which is 900. The provision for depreciation is 900 provided for 2019.
Yeah.
Now in 2019, the value trade receivable minus the provision for trade receivable is 1,284.
Okay.
So 1,284 minus 900 give us the value that we're going to take to August 2020. So in August 2020, our income statement will have 384, and our provision for depreciation for August 20 will be 384. So you debit income statement for 384, you credit provision for doubtful debts 384. Clear?
Yes.
Question 19. NEMA sells two products, product G and product H. The following information is available about its inventory at the end of the financial year. Did you get it right? No.
Which is 19.
Yeah.
No.
It's okay. So for H, for product H, I did product H first. Product H is 800 and the net realizable value is 1.2. So that one doesn't have any issues. So 800 multiplied by 1.2 is 9,960.
Okay.
Yeah. But product G, we cannot use net realizable value because some goods were damaged. So the total number left is 900. You have to multiply with the cost price because we are talking about the cost price of that asset, that stock. So now they multiply by 2 is 1,800.
So you'll not use the MBV?
You can't use it because goods were damaged. So how do you calculate your next realizable value? You can't.
Goods are damaged. You mean that MBV?
You cannot use it. Yeah, because the NBV used here is for the total 1,000. So it's better for you to just talk about the $2. So that's 1,800 plus 960, which is 2,760. Clear?
Yes.
Question 20. So the answer is A.
Yeah.
Question 20. They say, well, what is not a service business?
Yes.
Addressing it's supermarket though.
Supermarket can. Yes.
It's retail.
Yeah.
Supermarket is retail. And when you talk about supermarket, sometimes when you look at it from the roots, from the grassroots, it might also involve
sales.
It might also involve, is in between secondary
and
tertiary.
Yeah.
So, but here, basically, we're talking about personalized service. Personalized. Do you get it?
Yeah.
So, hairdressing is personalized, account practice is personalized, computer repair shop is personalized.
Yeah.
So, the answer is C. 21. The financial year for Peter, you got it wrong, I guess.
Yeah.
The financial year for Peter ends on 30 September. On 1st of August 2020, Peter received rent of 1,000. This covers the period from 1st of July. So we have July, August, September, October, November, 5 months. So that is 5 divided by 1,000. That's 200 for each month. Now, it said which entry will be made in Peter's statement of financial position on 30th?
Why did it give the 500 as option?
I'm coming, I will explain that. You know, they said the financial year for Peter ends on 30 September. On 1st of August 2020, Peter received a rent of 1,000. This covers the period from 1st of July until November 2020. So we have July, August, September, October, November. That's 5 months. 5 months divided by 1,000. That's 200 for each month. Yes or no?
Yes.
Great. So if it's 200 for each month, they said which entry will be made in Peter's statement of financial position on 30 September 2020.
Mm-hmm.
By 30 September 2020, that will 3 months count until September. The financial year ends in September. So October, November is a new financial year. Yes or no?
Yes.
So the 2 months in which is September, October, November becomes other payables.
Other payables.
Yes, you are owing the tenant. The year ends in September, but he has paid for October, November. So October, November in your account, your statement of financial position is a liability.
Other payables, yeah.
Do you get it now?
Yes.
So I wrote it as a 3-month count until September. Then other payables for October and November, which is 200 times 2. So do you get it?
400, yeah.
So it's 400. That is current liabilities. Is it clear?
Because it's current assets.
It's current liability.
Yeah.
It's tricky, sure.
Yeah, it is.
That's 21.
I want to know why they give us the 500.
Yeah, they want you to get it wrong.
Yeah.
22. In addition to share of a profit, a partner receives interest on capital, salary, and is charged interest on drawings. In your current account, you're going to have your credit account. You're going to credit your current account for interest on capital. You're going to credit your current account for salary. You're going to debit your current account for interest on drawings. So it is C. Clear?
Yeah.
Done, right?
Yeah.
Okay, 23. A sport club provided the following information. Did you get it right?
Yeah, 23, yeah.
Okay, so it is subscription and profit on reserve.
Income, not profit. I was like, yeah.
So it's 31,000. The 24. A club was formed on 1 July 2019. During the year ended 30 June 2020, subscription received from members total 2,500. This includes 120 paid in advance for the next financial year. Subscription outstanding on 30 June 2020 amounted to 280. So subscription amount outstanding with your subscription for 2020 should be added together. Then the advance should be taken away from it. So it's 2,660. Yeah. That's 2,500 plus 280 minus 120, 2,660. C. 25. Anthony does not keep a full set of accounting records. He knows his opening and closing cash balances and wishes to calculate his cash saves. The only thing that he's not going to calculate is the cash discount. The rest will be cash. Is it clear? Because cash discount goes with prompt payments to his suppliers, not with him. Did you get it?
Yes.
It's the supplier that will calculate cash discount, not him.
Trade discount for him.
For him, trade discount, yes.
Yeah.
Clear?
Yes.
26. A trader has not maintained a full set of accounting records. How can she calculate the credit sales for the year? Credit sales for the year is your receipt from credit customer plus closing trade receivable minus discount plus opening trade receivable.
Is it plus opening trade receivable?
Yes, it's plus because you have discounts.
Oh yeah.
You have discount there.
See.
Yeah. It's D.
Oh, it's D, yeah.
Is it clear?
Yeah. Plus discount. I thought it was like plus opening.
No.
Yeah,
it's minus opening trade receivable.
Yeah.
But discount you have to add it. I think it's clear.
Yeah. Nice.
Over. Number 27.
I got it wrong.
27?
Yeah.
But it was easy.
Okay, yeah, it's easy for you.
All right. They said we have a trade made, a trader means this. So we have this. They said we have our average inventory, the rate of inventory turnover, and the markup. We are told to find the sales. That is what we are looking for. The formula for sales is average inventory multiplied by rate of inventory multiplied by markup.
What? So they're all
Sales.
supplied.
Yeah. Average inventory multiplied by rate of inventory multiplied by markup.
Gives you the sales.
Yeah, give you sales. So what is the average inventory? It's 80,000. Rate of inventory turnover is 6. Then the markup means addition. So it is not 25% now, it will be 125%.
125.
125 over 100. So 80,000 multiplied by 6 multiplied by 125 over 100 gives you 6 million.
600,000, not million.
Now,
Yeah.
1, 2, 3. 1, 2, 3, 1, 2, 3. 60 million, sorry. Yeah.
No, 600,000. One of the options is 600,000. I think you're like
60 million divided by, I've not finished.
Oh, okay, yeah.
So 80,000 multiplied by 6 multiplied by 125 divided by 100.
Oh, yeah.
So this is 1, 2, 3, 1, 2, 3. 60 million divided by 100. That is 60,000.
Yeah.
Is it clear now?
Yes.
So the answer is D.
Yeah,
No, 27.
yeah, D.
Yeah, 600,000. I wrote 60,000. Yeah, D. 600,000. Yes. 28. For 28, they said a company provided the following. A company provided the following information. We have current ratio is current asset divided by current liabilities. So based on what we see here, the current ratio is increasing. If your current ratio is increasing, it means your trade receivable is increasing.
Oh, receivable.
Yeah, so it's C.
Yeah.
29. A trader wants to improve his gross profit margin. What's the formula for gross profit margin? Gross profit divided by sales multiplied by 100. So for you to increase your gross profit margin, you have to stop giving discounts.
That's it, yeah.
Because if you give discount, your revenue will fall. Clear?
Yes.
So the answer is
D.
29. I didn't even write it. I just did it. Number 30. Sales, okay. In the second year, we have 250. Okay, they said in our second year of trading, Michelle reduced the selling price and sold 1,500 units. So 1,500 units multiplied by 4.5 is our cost of sales, which is 6,750.
Okay.
Then they said our 250 was deducted or decreased from the gross profit, which is 5,500 minus 250, which is 5,250. The selling price will be gross profit plus cost of sales, which is 5,250 plus 6,750, which is 12,000. C. 30C. 31. Did you get 31 right?
Yeah, no.
So they say AB Limited and CD Limited both started business on 1 of January 2019 with an ordinary share capital of 100,000. Neither company had any debentures or loan. So what would have happened? Well, retained earnings. What reduces retained earnings is dividends, because you have to pay dividends. If you are paying dividends, you have to pay from your retained earnings. Yeah. So if you are not paying dividends, that means your retained earnings will be high. But if you are paying dividends, retained earnings will be less. Do you get my point now? Yes. So the answer is A. 32.
A.
Yes, it's A. Dividend reduces retained earnings. Question 32. Which interested party uses the financial statement of a business to assess current performance and plan for the future? That's the manager. It's the manager.
Yeah, manager, yeah.
Yeah. D. 33. The special skills of the employees are not recorded in the financial statement. Why? Because of we use money measurement. Skills cannot be measured. You don't have value for it. So it's C. 34. The principle of prudence talks about not overstating profit or assets and not understating losses or liabilities. So it's B. Clear? Yes. Question 35. What is not an aim of international accounting standard? It is B. Yeah. It's not their business to set standards for each country, but they should ensure that each country uses almost the same accounting equation. They compare their financial statements should be the same, and accounting should be practiced the same way all over the world. So the answer is B. Clear? So that ends the chapter. That ends the past paper question for 2020, right? Yeah, 1 November. I'm going.
An update. I got like